Ladies and gentlemen, good day and welcome to Q3 and 9M FY24 earnings conference call of Tips Industries Limited. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phones. Please note that this conference is being recorded. I now hand the conference over to Mr. Nikunj Jain from Orient Capital. Thank you, and over to you, sir.
Thank you, Aditya. Good evening, ladies and gentlemen. I welcome you to the Q3 and 9 months FY24 earnings conference call of Tips Industries Limited. To discuss this quarter's business performance, we have from the management Mr. Kumar Taurani, Chairman and Managing Director, Mr. Girish Taurani, Executive Director, Mr. Hari Nair, Chief Executive Officer, and Mr. Sushant Dalmia, Chief Financial Officer. Before we proceed with this call, I would like to mention that some of the statements made in today's call may be forward-looking in nature and may involve risk and uncertainty. For more details, kindly refer to the investor presentation and other filings that can be found on company's website. Without further ado, I would like to hand over the call to the management for their opening comments, and then we can open the floor for Q&A. Thank you, and over to you.
Thank you, Nikunj. Good evening, everyone, and welcome to the Q3 FY24 earnings call of Tips Industries. You probably already know this. The promoter has sold around 6% stake in Tips Industries to grow our film production business. We had disclosed this to you all more than a year ago also. The board has declared an interim dividend of Indian rupees 3 per share as part of our ongoing efforts to reward our shareholders. As you know, our team has been putting in serious efforts, and we are starting to see the results in our performance. As discussed last quarter, we are in the middle of reorienting our content investment to drive higher returns on content. By next year, the transition will be complete, and we will be able to share more details about our strategy in a couple of quarters. With this, I will hand over the call to Hari Nair, our CEO, to take you through the company performance and updates. Over to you, Hari.
Thank you, sir. Good evening, everybody. We are seeing an impressive growth of our music across all our digital platforms. The company has reported a healthy revenue of 64.8 crores for Q3 FY24. All digital distribution partners are very happy with our repertoire performance on their respective platforms. They talk about the organic surge of our catalog. Last month, we hired a senior talent to initiate projects on non-digital business. As Kumarji discussed, we are spending a lot of time thinking through our content acquisition strategy and investments. We will closely monitor the business and continue to update you. Now I will request Girish to share insights on the content and digital business. Thank you, everyone.
Thank you, Hari. Good evening, everyone. Our YouTube subscribers collectively have reached 93 million across all our channels. This quarter, we recorded 47 billion YouTube views, reflecting a 52% growth compared to the previous quarter last year. The total number of new songs released this quarter is 165, of which 82 were film songs and 83 were non-film songs. Our key releases during the last quarter were Hai Huku by King, songs from the film Merry Christmas starring Katrina Kaif, Vijay Sethupathi, and songs from the film Hanuman, which is now picking up more so after the release of the film. With Hai Huku, we also recreated one of our most popular dance tracks, Latka Dikha Diya, from the film Raja Hindustani, which we released before the end of the year to catch the party season. Now I will be handing over the call to Sushant to take you through the financial performance in detail. Thank you, everybody.
Thank you, Girish. Welcome, everyone, to the Q3 FY24 earnings call. Let me take you through the financial highlights of the quarter gone by. The company has reported a healthy quarter. Our revenue for the quarter was rupees 64.8 crores as compared to rupees 51 crores in Q3 FY23. That is year-on-year growth of 27%. Operating EBITDA for the quarter stood at rupees 43.4 crores versus rupees 25.9 crores in Q3 FY23. That is an annual growth of 67%. Operating EBITDA margins were at 67% for this quarter. Our profit after tax for Q3 FY24 stood at rupees 34.7 crores versus rupees 20.2 crores in Q3 FY23. That is a growth of 72%. PAT margins for the quarter was 53.5%. Content cost for the quarter was rupees 14.7 crores versus rupees 18.7 crores in Q3 FY23. Now the highlights of 9 months FY24 are as follows. Revenue for 9 months FY24 was rupees 178.3 crores versus rupees 134.8 crores in 9 months FY23, which was a growth of 32%. PAT for 9 months was rupees 101.4 crores versus rupees 58.2 crores previously, which was a growth of 74%. With this, I conclude my opening remarks and open the floor for Q&A discussion.
Thank you. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of CA Garvit Goyal from Envest Analyst. Please go ahead.
Hi everyone, am I audible?
Yes.
Congrats for a good set of numbers. My question is on basically the expected number of songs that we are going to release in Q4 this year.
Yeah, this year also we release 100 plus songs. This quarter it will be 100 plus songs we release.
In Q4?
Yeah.
I think in Q3 we have launched 165, right?
Yeah.
So is it going to be down?
Yeah, we are more focusing on the quality of the songs rather than the quantity. So I think 100, 125 you can say we release.
Okay. And how do you see these streaming apps going behind the paid walls? Do you expect any short-term headwinds to our revenues because of it?
Actually, if you see, Tips is already behind the subscription or for a stream model. We don't have any MG or a streaming model. So I think and plus paid model, all still JioSaavn, Wink, and Spotify, 3 main apps. They are not 100% going on a paid wall yet. So it will take another 2-3 years. I don't think they will go. Even worldwide, if you see, nobody 100% directly converts it like this. So they will go slowly. They will keep both the models running, and they will grow subscription model. Then only they will little bit you can say reduce free wall. And if subscription grows, it's very good for the industry.
And so like one of our peers is facing headwinds because of this thing, and our revenues are growing. So that is why I was asking for the reason. Is there any kind of different negotiation happening between us and the peers? Us and the customers?
No, I didn't get that.
Actually, I was saying, our revenues are not getting impacted because of these streaming apps going behind the paid walls. But our peer is facing headwinds because of these things. So I want to just understand the rationale for it.
No, I don't feel we will. I can't comment on what others are doing or what other peer is doing. But I can assure you, touch wood, we are safe and we are not facing any challenge right now.
Okay. And can you tell me what percentage of revenue do we get from streaming apps business?
I think digital business is around 75-76%.
75 to 76% of our revenue is coming from our customers like Spotify,
YouTube, Saavn, all that.
Okay. And so in earlier calls, like you mentioned about the strategies that we are looking for to have the aspirational growth of 35 to 40%. of revenue year-on-year going ahead. So is there any color you want to put on those strategies?
Yeah, 30%, I think I feel 30% will happen year-on-year growth. What we have committed, I am sticking now also to that. It's achievable, and we will work hard to achieve that. Top line 30% and bottom line 30%.
And for this year, do you want to revise the earnings guidance like we have performed phenomenal in the first 9 months?
On the contrary, I feel bottom line will be close to 40%, I feel.
Okay, sir. Okay. That's it from my side, sir. All the best for the future.
Yeah. Thank you so much.
Thank you. Our next question is from the line of Ravi Naredi. No. Sagar Jethwani from Phillips Capital. Please go ahead, sir.
Yeah, thanks for the opportunity. I'm audible?
Yeah.
Yeah, okay. So I have 3 questions. So in a typical Q3, that is a festive quarter, by what percentage the song consumption goes up as compared to the other normalized quarters? So this is my first question. Should I go on with my questions, or would you answer point by point?
You're asking songs consumption?
Yeah. So in a typical festive quarter, that is Q3 of any year, by what percentage the song consumption goes up as compared to the other normalized quarter? So for example, I'll just elaborate. So for example, there are 100 views or 100 number of streamings in a typical quarter. So in Q3, it would be 120 or 130 because of the festive season and all. So that's what my question is.
Yeah, okay. So second question.
Yeah, second is that, so we had signed a deal with Sony International. So what's the progress on that? Has the revenue started to come? This is my second question. Third is, in Q4, are we expecting any kind of movie delay? We have a good pipeline of Ishq Vishk, Buckingham Murder, The Crew. So I'm asking this from the point of that, is there any chance that music release would also get delayed? The content cost may get pushed over to Q1 in that case. So, yeah, these are my 3 questions.
Yeah, I will reply your last question first. Q4, yeah. I think 2 films will be released, 2 films. Crew will release, and both films, music will release in this quarter. Plus we will, Sony International deal, it's not yet, we are receiving any income. We have received some monies. We have kept that as advance, but I think from next quarter, we will see. I think they are reporting in 6 months, every 6 months. So you will see every half year, you will see some numbers going forward. And regarding question number 1, songs consumption. Hari, you take this question. Songs consumption compared to quarter 2 or quarter 3.
Yeah, sure. So for consumption, normally it goes up by 20-30%, but there can be platform to platform variance on that. So does that answer your question?
Yeah, okay. So I got that. So on the third question, again, the sub question to it is that we can assume safely that the content cost would be around 45 to 50 crores in Q4 because our releases are on time and hence the film release would eat up some kind of content cost. So 45 crore or 50 crore is a safe assumption?
Only for quarter 4 you are talking?
Q4.
No, not that much. As I've said earlier, our our investment or content cost is linked with top line. So I feel it won't go. On the contrary, we are spending less money this year because of second quarter we expected to release 1 film, but we have not acquired anything. We have not had opportunity. So we will spending less money this year in totality, maybe between 25 and 27%. Ultimately, so it will be much less what we are expecting. It's not like that.
So the content cost for full year, this FY24 would be around 65 crores. Are you revising down?
I'm not sure. Let's wait for another 2 months are there. Maybe we'll acquire 1 more film. I'm trying to acquire 1 film. I have a budget. I can acquire that. I'm trying.
Okay, sure. Thank you so much, sir. Yeah, all the best.
Thank you. Our next question is from the line of Ravi Neredi from Neredi Investment. Please go ahead.
To Torani sir and your management, Mr. Nayyar and Dalmia ji, you really posted excellent result. Never market thing for these numbers. Sir, as you said in quarter 2 ConCall, almost 4 to 5 movies will release in quarter 3 and quarter 4. Quarter 3 already went. So then content cost will be 40 to 50 crore. Is it so? Just you have replied, no, it is not like that. Okay. And sir, how much revenue we generated from Spotify in first 3 quarters in this year?
Actually, I can't tell you individually how much we have received monies from Spotify. But as I mentioned earlier, we do digital business is 75% of our total pie. So okay, I think I can't reveal more than that. Please,
No, nothing. We do not want anything more.
Yeah.
Sir, you have sold a few percentage of Tips Industries to fund Tips Film. Can you sell some more share in future, or it will be sufficient?
At present, it is sufficient, but maybe a little bit of something we will do, as we need a big support of monies for our film business. So, and film business, because we also get a music company will also get a Tips Industries will get a content from them as a arm's length business we do with them. So that's needed. Money is needed for film business. So at present, I can't say anything about that. So let's wait and see.
Okay. Sir, is Merry Christmas not perform up to mark? How it impact Tips Industries and Tips Film?
No, we have already, Tips Films will talk in our Tips Films call. As far as Tips Industries is concerned, we have just acquired the music only, and our music is doing well. It is trending on YouTube, Spotify, and I feel that next 6 months it will really do well, and we will be on a plus side in long term.
Okay. And last, sir, we already grew 74% in 9 months in the bottom line. So will you change our growth target for full financial year 24 and financial year 25?
25 is this year you are talking about?
Both for financial year 24 and
so top line as mentioned, 30% will achieve, and bottom line this year we will achieve more than 30%. I feel we will touch around 40%. So this year is that, and next year we will work very hard to achieve that 30%, what I always say. So that's a projection you can say.
But sir, you are telling 40% in financial year 24. We have already crossed 74% in 9 months. So it will be very less figure.
No. But last quarter, if you put together all the figures, then I see around 40%, 42% will be there.
Okay. Thank you. All the best.
Thank you. Our next question is from the line of Pallavi Deshpande from Samiksha Capital. Please go ahead.
Yes, sir. Like how many films have acquired?
You are not audible.
How many films would we have acquired this year?
Next year we are targeting to acquire at least 10 to 15 films.
Okay. And this year will be 3 to 5.
Ma'am, your audio is not clear. Ma'am, your audio is not audible properly.
Just a minute.
Okay.
Is this better?
Yes.
Yeah. So usually we acquire 3 to 4 films a year. Is that right?
3 to 4 films in Hindi. If you combine all the languages, we acquire 10, 15, around 12, 15 films. Hello.
Our next question is from the line of Dhananjay Barodia from ASK. Please go ahead.
Hi, sir. Congratulations on a good set of numbers. This question might be actually a little more broad-based. We just wanted to understand now with, let's say, how we've seen that sometimes as a distribution channel, eventually the players start squeezing them to gain their own profitability. Is that something which we could see on the movie side where, like what's happened to Inox PVR, where they eventually lose of bargaining power, they've had that issues. Is that something which we could face also in the future? Like obviously the next few years we have good numbers, but eventually if the likes of Spotify or YouTube get bigger and bigger, is that a risk which we could see on the horizon?
On the contrary, I don't feel that to happen to us. On the contrary, they need us because our content is exclusive content. They cannot get my content from some other player. So they need all the companies to be with them. So that is never happened to this. Theatre businesses, they are in a distribution business. So they are at risk. So in my case, then you can say that Spotify is actually Inox PVR. So content companies are very, very safe.
Okay. But then is there a risk that some players might decide to get into content themselves? Let's say, I'll tell you why. Let's say now, today Netflix also decided eventually to get into their own content versus vis-a-vis just taking content from producers of movies themselves. Is that something which could also?
No, that will affect film business, not even the film business won't affect. I will tell you if you ask me this question in my film call, I'll tell you that. But music business has no issue because music business depends on a repertoire catalog. If your new release is good, then also 85% business comes from old music, catalog music. So from where they will get catalog? So it's very impossible. They will shut down in 15 days.
Okay. So then how would you see this, let's say 5 year hence? What would be a vision for the company in terms of as 5 years hence becomes our catalog will get bigger and bigger and we should get more bargaining power? Would that mean we could take more money from YouTube and Spotify? Does our bargaining power increase?
See, I feel the music industry in India has actually started growing last 2-3 years. And I feel today now our industry is around 2,800 crores odd. Plus maybe plus minus little bit 5,600 crores here and there. I easily feel in 3 to 5 years, this industry has potential to grow 10,000-12,000 crores.
Okay. So then that's it. And so then what is our plans? How much are we willing to do capex for the next 3 to 5 years? How are we looking? Because eventually, are we thinking of a system where we want to keep doing the same business, or are we thinking of expanding our total addressable market by adding more lines of business? How are we thinking along those lines?
No, actually, Dhananjay, we really love our business. So we are very focused on our business and we are not changing any new business or we are not starting anything new. We are very focused. We are doing well and we want to continue to grow with all of you and very, very focused.
Okay. So then, would it be fair to assume that our cash flows will keep improving because our investment as a catalog increases doesn't require more and more investment going ahead?
Absolutely.
Okay. So what would our plans be to do with the incremental cash flow? Because we'll have solid cash flow looking at the current numbers. What would we look to do with that?
We will reward our shareholders. We do buybacks. We give a lot of dividends. We keep on giving that. You see the presentation, you will all these things mentioned. I think 60% something plus we have given this year as also.
Okay. No, we've really impressed that how you have really rewarded shareholders.
Yeah.
So yeah, thank you for that. Perfect, sir. Thank you.
Ladies and gentlemen, a reminder to all participants, you may press star and 1 to ask questions. Our next question is from the line of Dinesh Kulkarni, an individual investor. Please go ahead, sir.
Hello, sir. Can you hear me?
Yeah.
First of all, very congratulations, sir, on a good set of numbers. I have a question on the content cost here. Do we see these kind of numbers going forward? Like, would they remain around 30%? Because this is very much low on the lower end for this 9 month. But can we see around 30% as a revenue for the next 3-4 years? Are we expecting that?
Yeah, I feel it's achievable, and we are targeting to achieve that.
Okay. So because if I see the financials, right, in the other expenses, I believe this is part of other expenses, right, if I'm not mistaken? Because that's the largest cost on...
Content. Yeah. Yes.
Yeah, content cost. So my request is, if possible, and it's a suggestion, if you could just bifurcate that in the expenses, that would really help us, because what else is, driving the, say, like if it is 14-15 crores this quarter, then what else is the remaining cost? That question still...
If you see investor presentation, I think you will get that figures in that. Plus, I think in the annual report, what we publish, we give all that.
Okay, that's great, really great. Thanks for that. And just one more last question from my end. Do we expect this kind of margins, really, EBITDA margins, to stay around 70%, or do we expect any probable, incremental increase going forward, especially in the coming years? Yeah.
I can assure you, year on year, you can keep in mind 30% is our target, and we'll achieve that. Bottom pat.
Okay, pat. Okay.
Yeah.
Sounds good. Okay. Thank you, sir. Thanks for answering questions. All the best.
Thank you. Our next line from our question is CA Garvit Goyal from Invest Analyst. Please go ahead, sir.
Hi, thanks for the opportunity again. Are we looking for any inorganic opportunity to further improve on our music library?
Which opportunity?
Inorganic opportunities to acquire an entity.
We are open to that, but I don't feel there is any substantial or a big label is already there. But if there is something, if we had opportunity, we'll do that. We'll grab it.
Understood. And what are the new strategies on which Mr. Hari is currently working on in order to further improve on the growth trajectory?
Give us 1-2 quarters. Mr. Hari is really still new, 3-4 months. Give him some little more time.
Okay, sir. Okay. Thank you.
Yeah.
Our next question is from the line of Samyak Shah from Samiksha Capital. Please go ahead.
Yeah, hello. Congratulations on good set of numbers.
Thank you.
Am I audible? Yeah. So, as other songs of Merry Christmas, like except title track, have been released in this quarter, fourth quarter. So, shall we be writing of the same in this quarter?
Yeah, we 100% written off this quarter.
Okay, so in fourth quarter, no?
Yeah. No, third quarter.
But all other songs have been released this quarter, if I'm not wrong.
We follow that practice. Even one song or one promo will release, we write off 100%. So we follow that practice. I think you all know that. So we have already written off that cost.
Okay. And are we planning to build any partnership with new OTT platforms?
Partnership with OTT platforms for music, so we have already partnership. We have Spotify, we are on Spotify, Apple, JioSaavn, we are already there.
Okay. And can you provide us with segmental bifurcation of revenue into like YouTube, OTTs, public performance, TV events, and publishing?
I can give you two figures. One is digital, one is non-digital. Digital is 75-76%, and non-digital, which is live performances, TV, sync rights, all those is 24-25%.
Okay, that's helpful. Thank you.
Thank you.
Thank you. Next question is from the line of Surbhi from Bellwether Capital. Please go ahead.
Yeah. Hi. Thank you for the opportunity. So, my first question is that sequentially there's a decline in our YouTube views. While you have mentioned in the presentation that's because of YouTube Shorts, but if you can throw some light on, or if you have some insights on why there's a drop in the viewership, that will be very helpful.
Yeah. Hari, can you respond to this?
I think, for the matter of fact, the YouTube views and the earning per views are steadily increasing for us. It's only aberration for the YouTube Shorts right now. And I think for the YouTube Shorts, we have a kind of fixed fee deals. So revenue-wise, it's not impacting us, while view-wise, it can always go up and down. Does that answer your question?
Yeah, to some extent, yes. And at what stage of...
Yeah, I also want to add, please understand, for shorts, that's a new thing for even YouTube. So they are also experimenting many things with many things. Sometimes they try to push food stuff, news stuff. So there's many things. So they are also trying to do something here or there. But as Hari mentioned, we are safe on our revenues because it's a lump sum outright deal. And so that's that.
And just to follow up on that, and at what stage of negotiation or discussion now to move to a very kind of a model there, because that will definitely change the game for us, right?
Yeah, Hari, go on.
Yeah. So, on this, actually it is very evolving for YouTube Shorts. They are very new. If you compare that with TikTok and Instagram, YouTube is fairly new. So I think it will take some time for them to also settle in as they are trying to see. But I think overall it will grow because Reels and YouTube Shorts are the only short video platforms that are actually growing and they're trying out very new things. So I think it's a positive thing for the music industry that way.
Got it. And second, just a clarification. Kumar sir, you said about 40% PAT growth. In 9 months, we have achieved 32% PAT growth. So 40% comes from an 8 crore number last year.
Actually, your audio is not audio is bad, I think. Hello?
Am I audible now?
Yeah, now it's better, yeah.
Yeah. No, so you just mentioned that we are targeting a 40% PAT growth over last year. In 9 months only, we have reached around 100 crores, which is a 32% growth. And 40% comes to a number of 108 crores. I just wanted a clarification that 40 very number that you have.
It's depending upon content. Should we? If we are acquiring one more film, so our content will be more, and we will be because we write off 100% same quarter. So at present, I want to say 40%, but in case it's happening more, so I can't stop that. So let's wait and watch.
So approximately, what would be a best case assessment of cost? For 9 months, it is around 30 crores. And we've guided 50% number from 70 crores.
Hello, ma'am. Your audio is not clear. Sorry to interrupt, but your audio is not clear.
Sir, I'll get back in the queue questions.
Okay.
Or I'll take it offline.
Okay. Thank you. Our next question is from the line of Maithili Balkrishnan from Ilkme. Please go ahead.
Congratulations on a very good set of numbers, sir.
Thank you.
A couple of questions. One is, what is the competition like for new content? While, we have sort of been a little lower than expected in terms of content cost. Is it paucity of good quality content at the right price, or is it something else that we need to keep in mind?
Yeah, yes, you are absolutely right. Content acquisition is very tough. And as mentioned in my earlier quarters, all the time I mentioned, if content deserves, particular content deserves 5 crores, people are offering 15 crores, 18 crores. So we are not following that path and we are not bidding anything. What we have a relationship in place, so we are exploring those kind of opportunities and we are getting. And we are not we don't want heavy content. We are not here to invest all the monies, whatever we are making in content. So we have our own content also, which we are recreating, remixing. We are doing that. Plus there is our own, you can say, Tips Films, our another company. They are producing films and their target is 4 or 5 films a year, going up to 10, 12 films a year. So that content also we will acquire at arm's length. So I think we will have our places fixed how we will get our content from different places. So we don't want to bid that, and we will follow that 30% on top line of revenue. Content acquisition will be in that much range. So I don't feel I will have any problem with that. So we'll manage.
Got it. This year it will probably be a little lower in terms of the content cost per se.
Yeah. This year, but next year we will be more aggressive on acquiring content also and creating content also.
Got it. Also wanted to check with you, in 4Q, in terms of releases, we have Ishq Vishk and Crew, right? Buckingham would get pushed out to the next quarter?
Yeah.
And there was also a Marathi movie, right, which we were expecting?
Sri Devi Prasanna. Yeah, it's releasing on 2nd Feb.
So that will also happen in 4Q?
Yes.
Okay. So and the it's only Buckingham Murder which is getting pushed out into 1Q.
Correct.
Got it. Also wanted to check with you that any progress on the discussions which were there going on with Meta in terms of the reels and other stuff?
Fingers crossed, you will hear good news soon. Just wait for some more time.
Got it. And lastly, on the international revenue, have there been any more deals or anything else that needs to be sort of...
As of now, nothing is there. But I said we always had discussions. Discussions keep happening. That's a regular practice of our business. So as said, fingers crossed. Just wait and watch. Kya hota hai.
Thank you, sir. That's all from my side.
Thank you. Our next question is from the line of Pallavi Deshpande from Samiksha Capital. Please go ahead.
Yes, sir. Am I clear now?
Yeah.
Yeah. So I wanted to understand how many Hindi movies content have we acquired this year? I think our target is 4 a year.
Yeah. For this year, I think we have released Merry Christmas, and हमने क्या release किया? This one, Ishq Vishk will come, and Crew will come.
Right. That's the release schedule. So I wanted to know the acquisition schedule. They will release maybe after next year.
Next year we have already won Buckingham Murder, as mentioned earlier, the lady on the call. And there is one movie, Tips Films is already producing 2-3 movies. 2 movies they are in discussion. So we will achieve. And also we are talking to 1 or 2 producers, and we will acquire that soon. You will hear that news very soon.
Right, sir. And so how much in advance is the music right acquired? Like if a film is launched today, it will take 1 year to produce maybe, but when is the music right?
You can say 9 months, 8 months to 10, 11 months, you can say.
8 to 10. And so in our music content cost of 31 crores, how much would be fair division between the music we create and music content, and how much on the movie side? Would it be 50-50?
No. You can say 40% of 35-40% of content we will acquire from that Tips Films, and 35% content we will acquire from outside, and 25% we will create of our own.
Right. So this percentage has been same this year also?
I feel so.
Right, sir. And so lastly, in terms of this, the between these channels you mentioned that, about Wink and Savan and this, how much, I understand they're all moving to subscription, but out of these, is Spotify leading in the race to move to paid subscription?
Yeah, they are trying. Spotify is very aggressive and trying that.
And would it be fair to say we're getting more from these rather than YouTube now? YouTube?
No. YouTube is 45 to 50% of our total business top line. Right. So YouTube is still, you can say.
As we move towards the subscription model, can this happen that, these other players will be a larger share as we go ahead because they are more aggressive on the paid model?
Yeah. Yes. Spotify is the biggest player, second biggest player in the world. I feel they will be in India also. That will happen. It's happening actually. It's happening already. They are number 2.
They are number 2, right?
Yeah.
Right. Okay, sir. Thank you so much, sir.
Thank you, Samisha. Thank you.
Thank you. Our next question is from the line of Akshay Pawar, an individual investor. Please go ahead, sir.
Hello. Congratulations for a good set of numbers.
Thank you.
My question is, in case of buyback, is there any chance like promoter will increase their stake by not tendering stocks? Like we had lower promoter stakes by using buyback, we increase it up to the 75%. So is that a chance again?
Actually, nothing has decided yet. We'll take at appropriate time. We'll take appropriate call.
Okay. Thank you.
Thank you.
In the interest of time, that will be the last question. I would now like to hand the conference over to Mr. Nikunj Jain from Orient Capital for closing comments.
Management for taking the time out of this conference call today. And also thanks to all the participants. If you have any queries, please feel free to contact us. We are Orient Capital, Investor Relation Advisors to Tips Industries Limited. Thank you so much.
On behalf of Tips Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.
Thank you. Thank you.